Hello, and welcome to episode number 372 of the Armin Show podcast Science, People, Creativity, Learning More, Expanding Your Knowledge. Subscribe on YouTube, Spotify, or wherever it might be as the show continues to grow. On this episode, we have the author of this book, Democratizing Finance, The Radical Promise of Fintech, which is financial technology shortened. The author is Dr. Marion Labouré. Marion, welcome to the show.
Hi everyone, hi Armin. Many thanks for the lovely introduction. I'm very glad to discuss this with you today.
Very glad to have you on, and with you doing many things at the same time. Some of the places that Marion can be found is she's a senior economist at Deutsche Bank in London, and also at the same time lecturer at Harvard University with extensive private sector, public policy, and monetary policy experience, including at the European Commission, the IMF, the Luxembourg Central Bank, and Barclays. She's also gotten various awards and is a cryptocurrency mastermind, which is a cool description of sorts. So you are a senior economist at Deutsche Bank in London and lecturer at Harvard University. How are those both going, and how did you get into the field of finance in the first place?
Yeah, so to start from the very beginning, I completed my undergraduate degree in quantitative mathematics and econometrics at the University Paris Dauphine and master in European politics and international relations at the London School of Economics, so in London. And after my time at the European Institute, my professional journey started at the Bureau of European Policy Advisor, which is the office of the President of the European Commission. I then worked as an economist at Barclays and then at the Central Bank of Luxembourg, and I was also a fellow researcher at the International Monetary Fund. And actually, after my PhD, I ended up lecturing in the economics department at Harvard. And while working at Harvard was an unplanned way to follow my partner in the US, it ended up actually being one of the most interesting years and a great platform to grow. So I ended up authoring some papers, books. I got some awards, as you mentioned it. And there was one thing I was really missing was probably like the fast-paced, collaborative, and real-world focus of investment banking. And that's why actually I'm now back in London working at Deutsche Bank. And when I got my offer from Deutsche Bank, actually Harvard offered me to keep my position there. So I'm still teaching on a weekly basis. So every Wednesday evening, London time, online. And I'm going to Harvard every summer in July to teach in person. So I'm taking 1 month.
That's cool. It's nice to be able to do multiple things at once with technology that we didn't have a long time ago and still provide your value
It's
across
quite
both
nice
ends.
indeed, as you mentioned, because on one side, I keep my academic position. So it allows me to have like this academic great colleague with whom I can talk about like future trends, all the structural trends that we are seeing, long-term things, and so on. And at the same time, I managed to combine it with a position in investment banking, and we are analyzing like all the market, what is going on, but it's much more focused on what is happening in the news these days, rather than super long-term or super backward in terms of history.
Now, you mentioned long term there. One thing before I ask about that, would you say you have to do long term thinking in all that you do, or do you include any short term, or is it mostly long term, working at a bank or thinking about finances?
Yeah, that's a good question. And I think my personal view on that is that you have several ways to look at what is happening in the news. So you can cover like what is happening right now in terms of the specific news, or you can take a look at a longer term lifetime. And I think it's much more interesting to look at what happened in history and what is about to happen, and to look at policies, what is in place, government infrastructures, investment, to better understand where we are. So I try to have like a big picture approach to look at history, but to look at what is happening these days as well, and what is happening and what is about to happen in terms of the next 10 years as well.
As an investment banker, what is an average Thursday morning? What are some pieces of investment banking that happen?
Yeah, the good thing is like I mean, you need to publish papers much more frequently than what you would do in academia, given that, again, we are covering like shorter term shorter term news, rather than in academia you have to look at a very structural models, theoretical model where you have like a lot of mathematics basically. So that's very different. I mean, in terms of time to publish a paper in academia, it took me like 4 years to publish a book, while at Deutsche Bank it takes me like between 1 day and 1 week to work on a paper. So the timing is very, very different, and what you have asked basically when you are in investment banking is to be able to interpret the news, to have a view on that, to really interpret, to see how it's going to impact the future. What you are asked in academia is to look at a niche topic that hasn't been looked at it before, and to discover something which is new.
That reminds me, one time somebody gave me a visual of all the knowledge in the world is like a circle, and then when somebody does bits of research in their category, it's like the circle has a little edge that pops out, and it expands a little bit. And then there's somebody else in some field, in anthropology, and then physics, and it expands the knowledge.
But absolutely, Armen. And the main difference as well is in terms of the coverage. For example, when you are an academic, you're looking at a specific niche topic, while when you are like in banking, in research, in investment bank, basically you're looking at, you have a broader coverage. It's still a niche, but it's much, much broader than what you are looking in terms of topic when you are an academic. And in terms of the time it takes, I mean, yeah, again, just to publish a book, it took me like 4 years, because first you have to write a proposal, then the proposal needs to be approved by the board, and then you have like a lot of back and forth ping pong with your editor in terms of the structure. Then you start writing the chapters. Your editors needs time as well to comment all the chapters, to edit them. When you and your editor are happy with the book, when you publish for an academic press like Harvard University Press, the press I have published this book, we have what we call a peer review process. So basically the book is sent to a couple of people who are experts in the field. So they need time as well to comment the book. They have comments as well that you need to incorporate. So you need that. And when the book is back, you need time. It takes time actually to look at all the comments, to incorporate all the comments. You need again to update the book, to update the data, the numbers, given that actually time flies along the different steps. And when the book is back and you're done with your edits, sometimes it goes back again to the reviewer to make sure they are happy the way you have reviewed the book, you have edited the book. And then when everyone is happy, the book needs to go through the board again for approval. And when the board is approving the book, he's happy with the book, it takes at least like a year again, basically to edit the book, to update the book with the most recent data, tables, charts, to do some copyright, to have the charts and so on, to pick up the cover, to choose a cover, and to look at how you're going to communicate in terms of marketing when the book is published. So even when you have finished the book and when you're publishing the book, you have a year still.
Right. There's still that lag time.
Yeah, absolutely.
There's a delayed gratification to it in a way, which is nice. Sometimes it's good when things are delayed a little bit, then we can... I think part of human joy comes from anticipatory joy versus just joy, something that's coming on the way. I once saw like a dopamine spike, it's up there. You feel it even more before it's happening, knowing that it's going to happen, more so than when it actually shows up, because that's very brief and instantaneous, but the other one is longer and builds purpose and fulfillment in our being in a way.
Absolutely.
Yeah.
But when it's published, I'm very happy.
Right, that's true. At that point, everybody, look what I have done. That's true. There's something nice about it. And it's a real statement. I've always thought about it. With a book, that's a book. And so years down the line, it's like, look, this is a physical, tangible item of thought put out into the world. It's part of the knowledge base. It's something great. You might see it at a place. There's something interesting about that to me. So I always like books. That's cool. And then also, by the way, you have a co-author. I should ask that. Your co-author, how did you team up And how have you known them? What led to that pairing between you two?
Yeah, I met him a couple of years ago, and the thing is, he used to work at McKinsey, was covering the financial services sector at McKinsey, so he could bring like a lot of case study, given that he has worked in the industry, and it was like a nice experience because in addition to being a good friend, he has also like a deep knowledge in terms of how banks are working, how fintech how does that work in terms of films, given that he did like a lot of mission in the fintech space previously. So we ended having this idea together to publish a book, and the fact that I could bring this academic view, it could bring like this expertise use case view. We thought that it would be a great mix to basically collaborate on a book together.
That's cool. I think some of the best things in life are collaborations, or like two brothers or two sisters, or a couple of really strong friends, or some colleagues. The best things come from collaboration. It's hard to do as much just as a single entity floating through the planet, if you will.
Yeah, no, absolutely. And actually, probably like one thing that we notice in academia, I would say, is like you tend to write with good friends and colleagues who are like after so many years very good friends, and it's very nice because you get to know how they work, so you know what they are good at, they know what you are bad at, so basically you can enjoy the good part and the bad part, which is basically not easy to write together, but on the other hand, it's also nice when you know the weakness and the strength of the other person. You can make sure that the book is well balanced and everyone is bringing some value to the book.
Valid point. Now, speaking of the book, this wonderful duo collaboration, you cover democratizing of finance, and so the first question that comes to mind is, what is the benefit of that? What problem do we have today, or what problems do we have today that would cause an interest in democratizing finance?
Yeah, I think we are living in a macroeconomic environment which is not easy. I mean, especially for millennials. I think maybe now it's slightly better, but actually until last year, we had this kind of COVID effect with a lack of opportunity in terms of job, a lack of opportunity in terms of investment, the housing market, which is extremely expensive, so not really affordable. It's much more difficult to get richer, to be like the owner of his own flat housing these days rather than 50 years ago. And what we notice is like the return on capital is higher, tend to be higher than wage. It's what Thomas Piketty mentioned. And millennials are actually much more stressed financially than what they were previously. And in terms of fintech innovation, we have seen actually a lot of innovation, especially during crises. And for example, if I took like the 2007-2008 financial crisis that we are mentioning in the book, it's basically where blockchain, distributed ledger technology, DLT, emerged. It's where crypto actually also emerged. Bitcoin was invented actually following the financial crisis. And it's when you have like big crises that you have this kind of turning point moment. And for COVID, it's very hard to say what is going to happen after COVID, but what we have seen is like the explosion of e-commerce, the explosion of telework, artificial intelligence really took off as well. There was a boost in terms of automation. And in terms of the next innovation, again, we are like, we will only realize what the next big innovation are in few years. But I would be surprised if nothing emerged from the COVID pandemic.
Pandemics or changes in life cause everybody to be shooken up, and then suddenly there's a shift because necessity or opportunity seeking from business individuals. That's a good feature. One of the groups that has been impacted is millennial people, who are the younger group, mid-young group demographic, and they have been, we could say, hard hit in some forms. What are some items they are dealing with currently in banking that can be improved upon?
Yeah, I think, I mean, again, what we can look at is it's on returns. So the middle class witnessed a declining share of national income, and it was true actually even like on the long term since the 1970s. And actually they are chasing returns. They are seeking higher yields in more risky markets, and it's what actually appeared during the COVID pandemic. Second trend that we are seeing is the trend on ESG, which has been actually much higher, and it's increasingly higher these days. We have a younger generation which is likely to be more conscious of greenwashing items as well. In terms of the trend that we are seeing is buy now pay later market is also booming in the younger age groups, and we have like a third of the 18-34 years old which have used actually this buy now pay later. So but the market is still largely unregulated. And the other trend that actually we have seen, especially during the pandemic, is the fact that millennials and Generation Z are using social media much more than ever, but also to guide banking decisions. So they are using quite a lot a smartphone for payments, smartphone actually for consumer to consumer payments than what we that our previous generation were doing.
When you think of the groups, do you think of each, the youngest group, the millennials, older, into like demographics? Do you think of this group has more wealth, this group is struggling, this group has more wealth? Is that a thought process that goes on?
So actually what we are seeing in terms of academic studies, so it's not what I think, it's what actually academic studies are showing. It's like basically if you look at the generation of 60 years old plus, basically they were born in a context where GDP, economic growth was high, inflation was high, it was easier to buy a house, a flat, it was much more accessible. And these days, it's very different than what it used to be. I mean, these days, it's much more difficult to find a job. Inflation is very high, but let's see how long it's going to last. So it's like a new phenomenon. Economic growth is not that high. If you don't think about the rebound of the COVID pandemic, which was basically structurally inflated, but in general, it's much lower than what it was before. And in terms of opportunities, opportunities are probably like lower than what it was before. Yeah, I mean, in terms of jobs, it was much more easier to find a job 50 years ago rather than now. But again, this is for advanced economies. And what we are seeing to be a bit more positive on the emerging economy side is a rebalancing in terms of inequality. And emerging countries tend to get like richer and richer, and economic growth is still highly sustainable in these countries. And we are seeing a rebalancing in terms of inequalities. So in advanced economies, inequalities have been on the verge of increasing over the past few years. While if you look at the rebalancing between emerging countries and advanced economies, actually countries are much more equal than what they were a few years ago. And the middle class has boomed, especially in China.
I always think about inequality because I can almost feel it, and anytime inequality in different regions goes too far, the humanity level has to drop, because this is not like good for personal connection between others. When you know that somebody's 1 hour is worth somebody's 1 year, it's just unnerving a little bit.
Yeah, and it's what we call basically within countries inequality have been growing, but between countries inequality has been declining. So to be positive, we shouldn't forget that basically this is probably like in terms of improvement, worldwide improvement, this is extremely beneficial what happened over the last few years. If you look at specific countries, and I'm thinking especially Europe, the US, inequality has increased in these specific countries, within the countries, but across, between countries, inequality has definitely decreased over time.
have been like a global leveling force across all the
Absolutely.
countries.
So we are seeing this. Yeah, absolutely. Yeah,
That's not bad. Seems more healthy in some way in the bigger picture, so that's good.
agree.
This may be good. What could be some of the pieces in the next 5, 10 years that are revolutionary, that maybe already are starting right now, but what might be some elements that 8 years from now we were building right now?
Yeah, there are a couple of things actually that we can mention. The first thing that clearly came to my mind it's payment again. It's what we mainly covered in the book. It's the rise of central bank digital currencies. And 2 years ago, I think most of us didn't have heard about central bank digital currency. But these days, it's no longer the case. Most of us have heard about CBDC, and the question is no longer if we are going to have a CBDC, but when and how. And just to give you some numbers, today around 90% of central banks are developing a CBDC. Around 60% are experimenting at the proof of concept stage. And according to the Bank of International Settlements, central banks representing about a fifth of the world's population are likely to issue a general purpose CBDC within the next 2 years. So again, this is something which is much, much bigger than what many people don't realize. And if we look specifically at emerging economies, they are actually very well advanced in terms of payment, fintech, innovation, and they are probably likely to move quicker with, probably like as well a higher adoption than most advanced economies. And if you look at what is happening today, we have actually several countries who have a live CBDC. I'm thinking of the Bahamas, the Eastern Caribbean, Nigeria, Jamaica, so they all have a central bank digital currency. China has also been working on a CBDC since 2014, so it was the first actually country looking at a CBDC, and they started piloting the digital yuan from 2020, and actually they made it accessible to foreigners earlier this year. So given that we have, China, which is like a huge country with over 1 billion people, I have no doubt that even more countries will be able to launch their CBDC in the next few quarters or years.
What would you say is one large advantage of having a central bank digital currency as opposed to the default?
Sorry, I didn't get.
What is one advantage of having a CBDC as opposed to the default? Why have the central bank have a currency?
Yeah, so that's a good question. Actually, you have like several reasons, and I think it's good as well to not mix everything. It's like cryptocurrency. People tend to mix all the CBDC in the same basket. They are all very different. Some CBDC, some central bank digital currency, are relying on specific technology like the blockchain technologies, but it's not the case for all of them. Some CBDC are only accessible to the national population, while others are also accessible to foreigners. And you have like a couple of differences, technical differences across all countries in how they are shaping, building their CBDC. If I take for example China, the main reason for launching their CBDC, I would say there were like probably two. The first one is to in some way replace cash, because cash is well used in terms of payment in China, and cash is also used for illicit transactions, so you cannot trace transactions. You have like some illicit transaction. Sometimes it's paid also for tax evasion. So having like a digital digital currency would actually solve partially this cash issue, and people would rely much more on the CBDC rather than on physical cash. So physical cash was the first reason. The second reason was financial inclusion. We have like over 1.7 billion people who are financially excluded these days in the world, so that's absolutely huge. and a certain number actually are based in China. And what the government was willing to do is to help it was to help unbanked people to have access to money and cash. And the way it's going to work, and the way actually it's going to work, and it's still in pilot, so it's not yet officially launched in China. So there are still back and forth in terms of how it's the final step. But basically, you don't need to have a bank account. So you have a smartphone, and you can pay from your smartphone without necessarily to have your CBDC account linked to a bank account. So even when you don't have a bank account, you can have your digital wallet on your smartphone as well. Very similar to cash. I will give you a physical banknote, or I can send you like a digital SMS, or I can send you like a QR code, or I can send you a PDF. It's very similar in terms of how to interpret it.
That's a great system. I am sending some money right now through CBD.
Absolutely. You can send me a QR code, a text, a PDF, and I will get it. It's how you can see it. But again, so that's the main motivation for China. So to look to improve financial inclusion, to decrease the use of cash. But if you look at countries such as the US and Europe, it's very different. I mean, I would say the main motivation behind is probably like to modernize payment, and the second reason is probably as well because they feel the competition with other digital currency. So it's one way to increase the use of digital currency, but to have a public digital currencies. But in terms of adoption, yeah, my main concern is probably like on the adoption rate, because in the US, in Europe, we are used to pay with our physical card. It's very convenient. I mean, we just need to type. We have the contactless technology. We are all relying on the plastic card, on the physical card, and it's much easier actually to move to a mean of payment which is more convenient. And I'm not sure that paying via a smartphone is much more convenient than paying with the contactless technology with the card.
Right. They're both kind of similar right now.
And we are used to it actually as well. So when you are used to pay in a certain way, it takes time actually in terms of habits to move to a different habit.
Actually, I have to throw that in there. Slow adoption, many different categories. What we do as people, it starts, but it takes like 14 years before that thing from 14 years ago is picked up. What are your thoughts on slow adoption? Do you always take into account in every category? Is there anything you can speed up? Is that ever possible, or do people always go at a certain rate and you can't really do anything about it?
Yeah, that's a good question. So what we are seeing in terms of studies, if you look at all the innovations, we tend basically to undermine innovation on the long term, but to think in terms of short-term adoption. So we all think that in the next 2 years something big is going to happen. But actually, it takes much longer for innovation to really take off. But we all undermine what could actually happen over the next 10 years. And we are seeing that for most of the innovations. If you had told me like in 1990 that actually everyone will use their iPhone or their smartphone 5 hours per day, I'm not sure I would have believed it.
That's true. Really, 5 hours a day? You're going to be on 5 hours a day? Yes, I will. Maybe 8. Some people will be on for 10.
But in terms of innovation, Armen, actually, I think the main point regarding innovation is basically, I think when you look at all the main innovation that happened, like the smartphone, the laptop, and all this kind of innovation, digital innovation especially, people love convenience. And I think we all care about convenience among all. And it's a good way to look at what is going to happen. Because, for example, when you ask people if they care about their privacy, everyone cares about the privacy. But I think we care even more about convenience. Most of us have a smartphone. Most of us, we are receiving our emails on our smartphone. Some of us are paying their smartphone. Some of us are writing all our text message, all our calls via smartphone, and everything is recorded at the end. But again, that's so convenient that we care more about convenience than we care about anonymity.
It's a great point. There might be some individuals that would say, I really care about this, but their actions say this. And you have to look at actions because on the business end, everything is based on actions and not intent behind the scenes.
Yeah, and that's why actually, if you ask people what do they care of, I think the answer is much more different than if you look at, okay, what are people doing exactly?
They don't match.
And convenience is always king and the big winner in other case, which is not always good. I mean, I'm not saying it's good, but I'm just saying that it's what you notice in terms of innovation. To answer your question, and the second, and so my first point was about convenience, and the second point in terms of innovation, I think it's pretty important as well to look at what the government is pushing, what are the main innovations, and how is it done by governments? So we have governments in the world which are financing R&D in specific industry much more than others, pushing innovation, pushing adoption, sponsoring infrastructures much more than in other countries. So it's quite important to look at what government is pushing to understand what are the main innovations to come.
That's true. Sometimes you look at their plans or the subsidies, and then suddenly that becomes the popular thing 10 years later. But why was it that? It's just because they said we will pay for some percentage of this, and now corn is popular in the United States, or let's say electric vehicles or some category.
Absolutely. And for example, when we were talking about like the next innovation, I think it's clearly illustrated if you look at China. I mean, you can say that basically the Chinese government is heavily invested in artificial intelligence. If we look at the US, I mean, a few years ago, the government was highly investing in the chips semiconductor industry. And you can look at what are the long-term plan, what are the long-term investment to better understand where the next innovation will be generated.
It's a powerful point. It's almost like a guiding force that the government brings to that. And then it seems like individuals were creating in that category, but actually there was a huge push toward that, and then somebody's like, okay, I will go ahead and do it. So that's the linkage of the story. In economic development, what kinds of items can lead to more inequality or also potentially reduce inequality? What can be done in the economic space to increase or reduce inequality?
Yeah, I would mention 4 points here. First of all, I think we need to narrow the technology literacy gap that we have, and especially for the unbanked population. In the developed world, the higher income from capital relative to labor driving, it's inequality. And we have high barriers to enter in tech due to rapid pace of technological development. And we can see that there is a very strong correlation between underbanked people and poverty in the developing market. And if you look specifically at financial literacy, it's pretty low. Even in OECD countries, only half of the population, half of the consumers, adults are able to answer like simple interest-based questions. So yeah, first point, we should increase the financial literacy gap, and we should increase as well the technology literacy gap. My second point is about probably like bilateral trade agreement. We have trade blocks which entrench economic growth and wealth between nations party to the agreement due to high trade barriers and preferential treatment of domestic firms. And at the same time, the benefits of liberalizing trade is not spread equally within a country. And there are sunset industries which are shielded from external competition and will be forced to consolidate, generating like greater inequality. The third thing in terms of inequality, actually, that we need to be very careful, and we have seen that during the COVID, the pandemic recently, It's the rise of the number of freelancers and the gig economy. So it creates economic and financial insecurity. I mean, gig workers, most of them, they have short-term contract. They have fewer resources provided by the firm. There is a lack of bargaining power as well with employers, as we have seen. Many gig workers are earning less than the minimum wage as well, and they miss actually like many benefits that other workers have. And the fourth thing, my fourth point that I would mention to your question, is the fact that few people don't have access to investment funds, loan money, trade finance, and this is true for individuals, but this is also true for SMEs, small, medium enterprises, through the traditional banking system. And then it's exacerbated again by the fact that regulation sometimes is complex, and the fact that financial literacy is low.
We don't think about financial literacy as much as, I think it's coming, the last 10 years it's being discussed way more that, oh, this is not in schools, or people should be learning about investing or how to manage their finances in a better way. And it is going around here, but you're right, in the unbanked population you're describing, they would benefit a lot from understanding how money works and how to make things work for them in the long term, or little bits of savings, building up their...
But my point was, I mean, for the worldwide population, I mean, this is true, and again, this is like really striking for emerging countries, but this is also true like for advanced economies. Citizen, I think we should teach at school more financial. We should have a better financial education. I mean, for example, if I take my personal case, I studied mathematics in school. I have never been taught. I have never been financially educated at school before 18 years old. While I was, I was learning tons of mathematics, trust me. But right. The basic concept of how to take a mortgage, what do we mean by interest rates, how to compound interest rates, and all these things, it's not part of the curriculum, at least in France, but in many other countries as well.
Little bits of knowledge can make a difference for years and years. In any category, I always value gaining knowledge in various disciplines, because getting 100% of the knowledge, great, but getting 10% is highly valuable. Obviously, it diminishes as you go more advanced, but get those base elements. The average person walking around without the base elements is almost like crippled for a decade, 2 decades, 3 decades. No good.
Yeah. And actually, if you look at long-term investment, if you are like purely rational, everyone should invest in equity, because if you look at long-term investment, and actually I have this nice chart in the book, but looking at, I think we took like 70 years of investment, if you find the page, comparing actually equities versus treasury bond, and you can see that the difference is just striking between the two. So if you are purely rational, you should actually invest in equity rather than bonds.
I just want to showcase, there's just charts. I'll just showcase that there's charts in the book. I won't look for it.
But again, this is a long-term study, so you have like a lot of fluctuations on the short term, especially these days. But yeah, if you look at the long-term impact between investing in equities versus in bonds, you can clearly see the difference.
I want to add that in. I always look at details of books. So I want to mention to individuals that, one, there are good subsections, good imagery in the book, and also in the back section we have charts that show percentages, people that agree, don't agree with different financial questionings, people who prefer cash and different payment methods. There's a lot of data near the end of the book, which is before the, the notes, which I always look at now first when I'm reading a book, because I like to see the sources of everything that the book came from, and it gives me an idea of what the book is about before I start reading. Highly recommend to individuals, when you read a book, look at the notes first. If you're in the category. If you don't know the category, then But if you're kind of in the category, then maybe you'll recognize an author, or maybe you'll recognize a book or a philosopher or someone that's mentioned. And already now it's like you're connected with the book more than if you just started from scratch. Random pointer there. Yes. So that's a cool feature. Now this one I had to throw in because one time I spoke with Yancey Strickler, who co-founded Kickstarter, and in the book you had mentioned access to crowdfunding or ways that people can get funding for their effort. How does that change as we democratize finance? What are better methods now for that?
Yeah, so we have more than 50% of crowdfunding campaigns which manage actually to achieve their goal, so it's pretty high, half of them. And in terms of the main types of crowdfunding, I would say there are like probably five. Donation-based crowdfunding, we have equity crowdfunding, we have membership platform, peer-to-peer lending, profit-sharing crowdfunding. So all of them have different features, but yeah, there is quite a lot of crowdfunding if you want to achieve your objective indeed.
In those populations where people don't have access to much, is that a method to start a business or something to get little bits from many people, or is that not really a way yet for those populations?
Again, I think so. In the world, we have like 1.7 billion inhabitants who don't have access to a bank account, so that's pretty huge. And basically, what does it mean? It means that they cannot save, they cannot invest, which is the primary thing. Because I mean, if you have like a disaster happening, you are a farmer, you have a disaster happening. It's nice to have some saving. It's nice to be able to invest. It's nice to have an insurance. And it's key actually to be able to have a bank account. So these people who don't have a bank account are relying basically on physical banknotes, and that's why I would be surprised if physical cash is not staying there for quite long these days. But countries are also looking at alternative to digitalized cash. Because actually what we notice according to the stats from the World Bank is like half of the population which is unbanked, more than half actually, they have a smartphone, they have access to internet, they have a smartphone. So that's why having some app where people can access to the app via a smartphone could potentially help with financial inclusion.
Makes sense. Now, I have two other brief questions here in relation to digital currency and governments using digitized currencies. One is, what features would consumers look for to use a digital currency? What are some good features that they might think, okay, this is the one I will go with?
Yeah, so again, I think convenience is always key. I mean, it's exactly what we talked about earlier. And the main feature is, it's definitely convenience. It's how I see it. If it's not convenient, if it's less convenient, that actually the way we are paying these days, I'm not sure that the adoption rate will be like quick and very high. And actually, what we have seen, if you look at China specifically, they almost moved from cash to digital payment. So they have kind of skipped the plastic card, and given that paying digitally is much more convenient than paying via cash, the transition has been pretty quick, and it was in terms of adoption pretty high as well. In advanced economies, it's very different because we are used to pay with the plastic card. It's very convenient to pay with the contactless way, and again, we are used to it. I mean, for us, it's easy. And I don't think it's more convenient to pay with a smartphone rather than paying with a plastic card.
That's true. Sometimes it can become sort of slow. It's like, oh, okay. Oh,
yeah.
Yep. That makes sense. I like that you point that out, by the way, that sometimes it skips, and it's nice to have. They didn't need to. There was a technology, then the next one, then this country that was way behind can skip this part. Has no base that's like messed up or muddled at this point, starts from scratch with the new technology. Now they're crisp moving into the next decade. So that's kind of cool.
And actually, sometimes it's easier to start from scratch than to have a legacy. I mean, if you look at China, they are very well advanced in terms of payment, app as well, WeChat, Alipay. I mean, they are very well advanced in terms of technology, payment technology. If you look at African countries, I'm thinking, for example, to M-Pesa. I mean, it's very well advanced. India, with Aadhaar, it's very stunning what they managed to do, like to enroll over 1 billion of the population. To digitalize ID as they did, that's pretty impressive. Or Grameen Bank, Grameen Phone as well. Yeah, I mean, we are seeing like lots of fintech applications, very successful fintech in emerging countries.
Starting from scratch is a big deal. I think about it like with ideas. When you have ideas from a base of scratch, then you go off. But then when there's like a muddled platform and you have to build on it, okay, this, but forget about this. I have to remove this. Too much effort. We're not really built for that kind of fixing and then starting again.
Yeah, no. Sometimes it's easier actually to skip, to skip and to leapfrog in order to have a successful technology and innovation. Right. I agree.
It's a great. I always think about things in terms of people and what just their general mind and what must be done, and it's the same process. Scratch is always. That's why people meditate, so they can start from scratch again and then. Oh, a nice space. I have no thoughts. Okay, now I can start from thoughts and build them and make like a nice space. My last question for you is, do governments become larger, smaller, or do they change as finance is digitized? What happens to the average government?
Yeah, I don't think. I don't think when you say finance is digitized, I don't think there will be a lot of change in terms of government. But it depends what you mean by government. If you mean government and central banks or only government. I mean, again, if we look at central banks, they are thinking in the process, or they have already, for those countries who have already launched their digital currency, they have actually digitalized their currency, but things are not changing that much, I would say, because, I mean, basically the way it works, consumer, for physical cash, they have their bank account at the commercial bank, and the commercial bank is basically liaising with the central bank. With a CBDC, central bank digital currency, the consumer has directly the bank account at the central bank, but all the relationships are going to stay intermediated by the commercial bank. So it's not going to change that much, and I don't even think that the consumer will really realize that it's much more digitalized than before. And in terms of government transformation, I think, I mean, a lot of things are in the process of being digitalized. I mean, if you look at tax filing, tax benefits, and a lot of transfers and so on, it's much more digitalized, and it's in the process of being mostly digitalized in the next coming years, definitely. But I don't think there will be a big impact in terms of how large or small the government is going to be. It's more like a trend. But again, I think we tend to underestimate, overestimate innovation in the short term, long term. But I also think that when we look at innovation, digitalization, we think that when everything will be digitalized, nothing will be done manually, which is not correct. If you look at, for example, the historical innovation, I mean, computers, many people have said basically with the computers, many jobs will become obsolete. And actually a lot of jobs as well as have been created. I mean, you need to repair computers, you need to make computers. I mean, we have like more and more apps on the computers, so it creates like a lot of jobs as well. And I don't think it's going basically to destruct jobs, to remove jobs, but I think it will create different kind of jobs. And if you look at the unemployment rate, especially in the US, I mean, it's like basically full employment.
That's true. The point you brought up about the consumers not seeing it makes me think of even like phones where technology going on behind the scenes to become a smaller processor or change the screens, but at the end result, you see the next year's model looks almost the same. A lot of stuff went on behind the scenes, but That's not for the consumer to deal with directly.
Yeah, and we don't realize as consumers, because actually we don't see it. It's behind the scene. But a lot of things are going to change. And yes, there was a very nice study from McKinsey where I think they estimated that over like a third of jobs in the next decade actually will be different than today.
Dr. Marion Labouré, where can people find your work and or material? Where can it be located?
So, I mean, you can find the book on Amazon definitely, and please feel free to stay in touch on LinkedIn, Twitter. I'm publishing what I'm working on, and I have a website where you can find all my academic papers.
This is very cool. I would like to thank you for having joined on this discussion, brought us a bit about finance, democratizing of it, and also giving us some information about payments, what people will be doing, the unbanked population, and CBDCs and more.
Thank you.
And we are out.